Hi, welcome to Let's Talk Forex. I'm Alison, and as always, I'm joined by Chris. How's it going today, Chris?
Yeah, and I'm okay, Alison. This is our last episode of the season.
It is. It is.
Yeah, that's pretty cool, isn't it? The time flies by so quickly.
Yeah, it's crazy. I think this is our 7th season as well. I can't remember what episode.
7 seasons.
Episode 137 or something.
Yeah, gosh, 137. When did we pass 100? Did we do a special thing for when we did a 100th episode?
No, we didn't. I don't think we really knew because we sort of don't do much of the editing.
I know we don't do the editing. Oh, no.
Yeah.
Well, we have to do something special for 150 then, if we're that close.
Absolutely. So you're in Spain at the moment?
I am in Spain, in sunny Spain. A bit too hot Spain. It's been fairly relentless, the heat, but that's okay. That's what swimming pools are for, and the ocean.
Yes, this is true.
Yeah. How are you doing, Alison?
Yeah, I'm doing fine. We're settling nicely in Port Alfred, discovering all the new beaches and rivers, and meeting people. So it's been fun. It's been good.
Good. Glad to hear it. So you haven't got winter there yet?
Well, it's gone down to 10. What did I say? 8 degrees over there. So yeah, that's about as cold.
That's pretty chilly.
That's chilly. Yeah. I think that's chilly no matter where you are in the world.
Well, yeah, no, that's true. That's true. And 8 degrees is cold. Now, here it's been regularly hitting 35, 40 degrees, which is too much, even for me. So I'll be happy to going back to Sintra, on top of my little mountain in Portugal, where it's going to be much cooler.
Yeah, so what are we talking about today?
Well, yeah, we thought for our last episode of the season, we'd do something a little bit different, a little bit more fun. So today we're talking about 3 of the most legendary traders in history. These are Richard Wyckoff, Paul Tudor Jones, and Jesse Livermore. The reason we picked these is because each of them changed the way that people understand markets and how they approach trading.
Yeah, so in this episode, we're going to be really diving into their personal stories, and we're going to also be diving into, how they traded. And these traders' philosophies continue to change the trading, influence the trading landscape. So that's also why we picked these 3 in particular.
So let's kick things off with Richard Wyckoff. He's often called the psychologist of the market.
Yeah, I mean, his story is one of ambition, I guess, and relentless observation. So he was born in 1873, and he began his career on Wall Street at the age of 15, which seems to be a common age among traders. He was a quote boy or a stock runner, and this was obviously before electronic trading. And obviously these roles then were essential because they would literally run across the trading floor carrying market orders to the traders. And even as a teenager, he showed a sharp eye for market activity, and he developed an intuitive sense of market flow.
Yeah, and he didn't come from any money. He didn't come from any privilege. It's quite a poor background, but had a real fascination for market movements. So he tried to learn everything he could. And by his early 20s, he had become a fairly successful broker. And he went on to found a magazine called the Magazine of Wall Street in 1907, which covered a lot of technical analysis and a lot of fundamental news about the markets, and became a real major source of market insight in the early 1900s. By the 1920s, that magazine had a readership of about 200,000 people, which is huge for the time.
But even by today's standards, that would be considered a big readership.
It is. And if you think about, obviously the population at the time was much smaller. And so it's pretty much everybody who's anybody in the markets was reading his magazine. So he did lose control of the magazine to his second wife in 1928 after a very public court case. So I think he did receive compense for it, somewhere in the region of $500,000, which is a lot of money at the time.
But beyond his public success, Wyckoff was also known to be deeply introspective, and he was quite private about his personal life. He was also very methodical and philosophical about the markets, and he spent a lot of time refining his trading techniques. He also believed that knowledge should be shared, which I guess is why he started the magazine. And later in life, he dedicated himself to teaching others what he had learned, and he established a lot of correspondence courses for traders. And I think a lot of traders traders will know of Wyckoff's method as well.
Yeah, no, he's very well known because he's such a great educator. He was also one of the early traders who was fascinated by the psychology of the market, of especially market participants. He emphasized the emotional and behavioral dynamics of trading, something now which is, very common, something we talk about a lot. And he would often remind his students that behind every tick on the chart, that there was a decision being made by a human being. So there was always an emotional element. There was always a human element. You're not just looking at numbers. And so he passed away in 1934. But as you said, Alison, everybody's still studying him today.
Yeah. Yeah, it's a huge, it's very influential in the market still today. And as you say, no, he was a huge student of human behavior. So he observed the great traders of the time. His contemporaries were Jesse Livermore and E.H. Harriman, and he distilled their behaviors into what we now call the Wyckoff method, something I mentioned earlier. And it basically revolves around price, volume, and time.
Right. Yes, exactly. And so the method is built on three principles: supply and demand, cause and effect, and effort versus result. And one of Wyckoff's key contributions, and I think something that's still very important today, is the concept of the composite operator. And this is the idea that institutional players operate in a coordinated way, and they create footprints in the market that then traders can learn how to read.
Yeah, which is very important, obviously, because the institutions move the markets. And Wyckoff wasn't just a trader; he was an educator. He spent the latter part of his years teaching this methodology to others. And even though he died in 1934, as we mentioned, the Wyckoff method is still alive and well today.
Yeah, and he's kind of, I think, teacher that a lot of traders wish they had. So, especially when they're starting out, he's very methodical. He was very thoughtful. He spent a lot of time with his students. He deeply cared about his students, and he focused on developing a really sound reasoning on discipline and habit, and how that will help you in trading. But yeah, so moving on from Wyckoff, let's move from the theorist to the practitioner, someone who's a bit more modern. And we can talk about Paul Tudor Jones, a living legend and a master of macro trading, I think.
Yeah, he really is. If you haven't already seen it, I would suggest going to look at his video. I don't know if it's still on YouTube. I'll go and have a look. But it was a very inspiring video to just see how he does operate. But his journey's much more gritty, very inspiring. He was born in 1954 in Memphis, Tennessee, and he came from a modest background. His father was his father ran a small newspaper, and Jones obviously was expected to follow in the family, business. But he was drawn to the markets instead, and this is where he found himself.
Yeah, and so he graduated from the University of Virginia in 1976. He was offered a place at Harvard, but he turned it down. And instead, he started working as a clerk and made his way to the cotton pits in the New York Cotton Exchange. He landed a job trading cotton futures at E.F. Hutton, but despite having a natural talent, he did get fired from that job, and not because he did anything particularly wrong, but because he loved partying.
Yeah, and one day he actually rocked up to work after a huge party, very hungover, and and they just decided they'd had enough of that. So that was the end of the cotton futures position. But as he admitted later in life, his early career was obviously marked by an enthusiasm for the nightlife and not enough discipline off the floor. And I think this changed once he was fired.
Yeah, no, the firing seemed to be a bit of a wake-up call. I mean, he didn't lose his edge. He didn't lose his chaos. I mean, I think anybody who watches documentaries of him or reads about him, he's a louder than life individual. And so he didn't lose that, but maybe he toned down the partying. Yeah, and so instead of giving up, he doubled down. In 1980, he founded the Tudor Investment Corporation, which would go on to become one of the most successful hedge funds of all time. And his most famous trade came in 1987, the big market crash, when he predicted the Black Monday, which was a huge crash. It wasn't just him; it was him and his chief economist together. They saw the correlations between the crash in the 1920s, 1929, and the 1980s crash as well. And he shorted the market, and he made an absolute killing.
Yeah, if you watch the documentary, they go into quite a lot of footage of that, of them making that decision. It's very interesting. And he blends macroeconomic insights with technical analysis, and he's known for being a contrarian. Which is something we've spoken about many times before. So he often takes positions that go against the grain when he sees the market at an extreme. And this is also because he understands that the market participants are generally wrong. The majority of traders lose most of the time. So he noticed those patterns as well.
Yeah, and really what sets him apart is his obsession with risk control. His mantra is play great defense, not great offense. He believes in protecting capital above all else, which I think is a really important lesson for traders everywhere.
Yeah, I mean, it's something we stand by as well. And let's not forget his philanthropy. He founded the Robin Hood Foundation, and it's one of the most impactful organizations fighting poverty in New York. So he's not just a trader that built wealth. He also used it to give back. Got a lot of respect for Paul Tudor Jones. I want to get on to our last trader that we were going to cover, and this is Jesse Livermore, one of my favorites. If you haven't already, he's got a brilliant book that I've been thoroughly enjoying, so go check that out. But he was called the Boy Plunger.
Yes, no, he's a stock trading legend, Livermore. He was born in 1877 in Shrewsbury, Massachusetts, and he was a math prodigy, which certainly helps if you're a trader. So he had a natural gift for numbers. He ran away from home at the age of 14 with the blessing of his mother because she didn't want him to spend his life working on the farms. And began working in something called a bucket shop in Boston.
Yeah, so for anyone that's not familiar, bucket shops are, were places where people could bet on stock prices without having to own the stock, like CFD trading. And he quickly realized that he could predict the prices by watching the tape and studying their patterns. And by age 15, he reportedly made $1,000, which was a huge sum at the time.
Yeah, a huge amount of money for the time. But he didn't stop there. So he was so successful with his bucket shop trading that multiple bucket shops banned him, and he had to travel from town to town under new names to find new shops that would take his trades. So his reputation as the Boy Plunger grew because he consistently made profits by shorting stocks, especially during downturns.
Yeah, and they really got frustrated with him. And I remember one part in the book where he's changed his name and he goes under an alias, and a guy phones at the bucket shop and says, "Are you sure this is not Jesse Livermore that's trading?" And he says, "No, his name, I can't remember the name he made up." He said, "No, his name's something else." So he said, "But what does he look like?" And Jesse said to him, "Don't tell him what I look like." So his reputation really preceded him. His first win actually came in the 1907 market panic, and he shorted the markets, and he made $3 million. So, but it was a 1929 crash where he actually made his fortune. So as the markets crumbled, Livermore taken, as you said, massive short positions, and he walked away with over $100 million, which is over $1 billion in today's terms.
Yeah, and it's made him one of the richest men in the world. But I mean, I think what we've also got to say here is that Jesse Livermore was, with his pattern recognition and this trend following, and his ability to short the market, he was very poor at risk management. As many fortunes that he made, he also lost. I mean, there's a story of when he first started trading in New York, he shorted the Santa Fe Railway to the tune of $50,000, and he put in all of his capital, and he leveraged 4-to-1, and he lost everything in about 3 or 4 hours. So as brilliant as he was, he did suffer a bit. He did suffer a bit when it came to risk management. But his strategy was all about trend following and tape reading and pattern recognition. He didn't rely on fundamentals at all. He believed price and volume really revealed everything you need to know. So really, like the beginnings of Dow theory and price action. And he famously would always wait for the right moment. His entries were spot on, and he always acted with full conviction. So he'd always go fully into the market. Again, not very good at risk management.
But the one thing he did do is that if he saw a loss coming and could get to it in time, that he cut his losses very quickly. And this is because he was so good at reading the tape. So because he understood the patterns, he understood how commodities worked, he really studied the tape. He knew exactly when things weren't going the way you'd expect them to go, and then he would cut his losses pretty quickly. And one of his famous sayings was that the markets are never wrong. Opinions often are.
Yeah, exactly. No, he did. Yeah, he's full of quotable quotes, Livermore. But it's also a cautionary tale. Despite his success, he struggled emotionally. He also struggled financially. He made, and as I said, lost several fortunes, and he battled depression, and he committed suicide in 1940. And when they took him, they went through his assets in court. He actually owed far more than he had in assets upon his death, which is probably one of the main factors behind his suicide.
Yeah, very sad, actually. Can you imagine if he had had the discipline and risk management of poor Tudor Jones? It would have been a
He would have been even more legendary. Yeah.
Still, his legacy lives on, and his book, Reminiscences of a Stock Operator, is essential reading for anyone out there that is serious about trading. The insights on patience and human psychology and taking risks, I think, are absolutely timeless. And also just getting to know the market. It's one of the biggest lessons I've taken from that book. And it's fun reading. It's kind of written in a diary format. The grammar's not amazing all the time, but you kind of look past that. And I really enjoyed the story.
Yeah, you get a real sense for the man, don't you?
What I find fascinating, though, if we look at all three of these amazing traders, is just that despite their different trading methods, all of these three traders shared key traits that I think are very important for traders around the world.
Yeah, if you're looking at Wyckoff, Jones, or Livermore, I mean, they all were very important on understanding market behavior and adapting to change. And even in Jesse Livermore's case, he would often talk about discipline. He didn't necessarily follow it to a T, but they all understood the importance of discipline in trading. But really, yeah, it's all about the behavioral impact of markets, the behaviors, human emotion and human behavior, and how it drives markets.
Yeah, and none of them chased every opportunity. They waited for the right setup. They respected risk. Jesse Livermore maybe slightly less than the other two, but they treated trading as a serious, disciplined craft. And yeah, very inspiring to read those stories.
Yeah, and it's also a reminder, I mean, all three of these, that success is more than profit. It's about understanding yourself. It's about staying grounded and continuing to learn. And you're going to make mistakes. And it's how you respond to those mistakes, not how big they are, and not how many times you make them. It's how you respond to them that's really going to drive whether you're successful or not.
Yeah, exactly. So if we could kind of sum it up, Wyckoff, teaches us how to read the market story. Jones shows us how to manage risk and look at the macro trends. And Livermore remind us of the more, I guess, emotional toll of the market and the resilience it demands.
Yeah. So if you're listening to this and you're wondering what to take away from these three, then I think the most important thing is to build your discipline, respect risk, and always keep learning, because the tools are going to change. I mean, and they're always going to change. I mean, you look at what we have now, the multitude of AI and technology that we've got, but the principles in the markets, these are eternal. These are never going to shift.
Yeah, absolutely. Well, that's a wrap for this episode. We are going to put links to the three different traders. If I can find the documentary, I'll definitely pop that up, and I'll put links to Wyckoff and to Jesse Livermore as well. If you enjoyed this episode, please remember to subscribe to our channel and like and comment in the comment section below.
Superb. Yes, and we're going to be back in August, and we're taking World Serve summer break. So we'll speak to you then. Have a great summer or a great winter if you're down south like Alison. Yeah, it's been a real pleasure as always, Alison.
Yeah, thank you so much, Chris. Cheers.